join, say another 5 minutes, and then we will start. In the meantime, if I can ask you guys a favor to please post your student number in the chat section. That is our form of attendance. I would appreciate it. Once again, good evening, everyone. I see more students has joined. I'm just waiting for a few more students to join. Please, for the new students that joined since my first initial greeting, please post your student number in the chat section. It is for our attendance register purposes. Okay, guys, I think we can start. Welcome to the new participants that has joined since my initial greeting, please make sure that you've posted your student number in the chat section. As I've said, that is the only way we are keeping attendance at the moment. Okay, moving on to probably some of the last time you guys will see the pre-meeting notes. Probably a bit late at this stage, but still beneficial should you want to. You're welcome to join the voluntary WhatsApp group. Send me your module code and your name to that number. The only correspondence that will really be shared over that group and over the next few days is if there is a group consultation. In other words, if a few students have logged a query that's got the same content, the same problem set, a set of problems or the area that needs to be dealt with, then what I will do is I will do a group consultation where I will send out an invite over on the WhatsApp group after clearing it with my UNISA colleagues. So that communication will be over the WhatsApp group and might not necessarily be over email. So that is why it's very important for yourself to benefit from me having your details and adding you to the group. One-on-one consultations, you are still welcome to log a query on the UNISA website. If you do not know how to do that, you are welcome to also send me a WhatsApp and I'll send you the link on how that process works. Attendance register I've already spoken about. Please make sure that you've posted your student number in the chat section. Very important. And then at the end of the session, if you guys will please do the session or complete the session evaluation form, I would highly appreciate it. I'm just quickly going to unshare. That's not really necessary for me to unshare the screen. I just want to put the question on. Guys, the question that we will be doing, I did send over WhatsApp, so you all should have it. For those that do not have it, I will put it on the screen. I just hope you can see it clearly. Okay. So if you get this question in the exam, one of the most important things that you have to do is first go to the required section and go read what it is that they specifically want. And in that required section, you pay specific attention to the date. In other words, what they want for when they want it. It is extremely important that you have that information. Otherwise, you will already start this question by not addressing what you are supposed to be addressing. Guys, just a note, please make sure that your mics are mute. Otherwise, it causes a lot of disturbance on this side. Okay, so let's quickly read the required. They say here, draft the consolidated annual financial statements of B Limited and its subsidiary for the year ended 30 September 22. Your answer must comply with the requirements of the Companies Act. The generally accepted accounting practice include only the post-acquisition profit after tax in the profit after tax after tax of the group. Notes of the financial statements are not required. Do all calculations to the nearest rand. Very important that you understand what they want, for when they want it, and how they want it. They say there they want the consolidated annual financial statements for B Limited and its subsidiaries. And then they say there your answer must comply with and it tells you what it must comply with. And then that last or second last sentence, or I think third last sentence, it says include only the post-acquisition profit after tax in the profit after tax of the group. So we will address that. So in a consolidation question, since you are dealing with a parent and a subsidiary relationship, you first need to determine the shareholding. So your first read through of the question must be to determine what percentage does this company hold in the other what the parent holds in its subsidiary? You must establish that. That is extremely important. So if we have a look here, it says A Limited became a subsidiary of B Limited. So B Limited, you highlight and you say parent, and A Limited is a subsidiary. The following are the trial balances of B Limited and A Limited at 30 September 22. Highlight the dates. So here we have B Limited and A Limited. B Limited is the parent, A Limited is the subsidiary. Okay, so we want to determine the shareholding. So we would want to know how many shares does A Limited have, and what is the amount or the number of shares that we have of those shares. So if we have a look here, share capital, and we draw the line. So there we see that A Limited has got 150,000 shares at R2 each. So what is the number of shares? So how many shares does A Limited have in issue? It's worth 150,000 Rand, but they say ordinary shares of R2 each. So that means 150,000 divided by 2 per share. That's the total shares. So how many of A Limited shares does B have? Or does B own? So now we need to go to the debits. We need to go look for an investment. And here we go. Investment in A Limited. 45,000 ordinary shares. And there they tell us how much it cost. 45,000. So of that 75, 45,000. So the shareholding is 45,000 divided by 75,000. That equals 60%. And in your analysis, you can already go and write 60%. And NCI, the non-controlling interest, will have 40%. Any questions so far? Guys, we are very close to the exam. This is the time that you have to ask questions. So if you don't use this opportunity to ask questions, you are missing out on an opportunity. So please make use of this opportunity. Okay, so we've determined the shareholding. Be careful of not just to use the 150,000. Make sure that you use the shares, not the share value. So very important. And then back to the question. I just want to correct something here. You will see there's a bit of a misalignment, unless I looked at it wrong. Yeah, just please make sure that there's a bit of a misalignment here. It's 3,000 and 60,000 is the next line, and 311,244. Let me just correct it on this side. So that line should read 3,000. The next one should read 311,244. Guys, I see there's people asking which question this is. As I've said in the beginning of the class, it is the question that I sent over WhatsApp. I will try and post it on in the chat section. However, I do not have any guarantee that it will work. Just give me a moment. Okay, I'm posting it. It still says sending, but I'm going to continue, guys. Okay, moving on. So what I would like you guys for me to do, since this is a participatory class, if you can assist me in completing the first entry into your analysis, the at date of acquisition. At date of acquisition section. I'm going to give you 5 minutes. I'm going to put the question back up, and then I'm going to give you 5 minutes, and then I'll join again. Okay, guys, let's have a look. They say A Limited became a subsidiary of B Limited on the 1st of April 2022. And we are doing the year ended 30 September 22. In other words, A Limited became B Limited's subsidiary during the current financial year. If you look at the dates, 2020 and also 2022, it happened in the same year. In other words, there's no sin spot. So we must be very careful of how we start this question. So let's have a look at the analysis. The investment says we purchased 45,000 ordinary shares for 397,000. So that's our shareholding. There's also a preference shareholding, which should immediately indicate to you that there needs to be a second analysis. We have a separate analysis for the preference share as well as the preference dividend. So, but we will get to that. So don't confuse that with the main shareholding. So if we look at the ordinary shares in issue, it's 150,000. Share capital, 150,000. What other reserves would there be? Any suggestions?
But retained earnings.
What would the amount be? $380,000. Because we want.
Sorry to disturb you.
Hi, Nomusa.
I think you made a mistake on the share capital. You've put in the value, not the number of shares. Oh no, and it's me who've done a mistake. It's fine.
100%. Yeah, just remember on your analysis, we're working with the RAND values. We only work with the number of shares when we want to calculate the percentage shareholding.
Okay, thanks.
No problem. Retained earnings. The key thing that must be in your mind and that you must make a note of that makes this question a bit different than your normal questions, and that's why I chose it for tonight, is that the shareholding in the subsidiary was obtained during the current financial year. That makes it different than some of the other consolidation questions where you have an at date of acquisition, since date of acquisition to be the beginning of the current year, and then a current year. Just remember, don't get caught up in that format. Okay, so it's very important that you do not get caught up in that format. Okay, so we have share capital, that's 150. We do have retained earnings. So what do we want to, why are we eliminating retained earnings? We are only eliminating the retained earnings part that didn't belong to the group. So the opening retained earnings of the subsidiary definitely did not belong to the group. The subsidiary made that retained earnings all on its own. The group wasn't involved when those prior period profits were made. Okay, so we want to eliminate there. So that's why we say 380, the opening balance for retained earnings. But since we do not have a since date of acquisition to the beginning of the current year, because we bought this share in the subsidiary in the current financial year, we must also allocate a section of the profit that was made before the shareholding was obtained in the subsidiary. Is everybody happy with me saying that? A part of the profit was made before the group started.
Is it because the group is only 6 months?
Yes. Let me quickly do this. Give me a moment. Let me put up the whiteboard. Okay. So let's look at the financial year. So the financial year, per the question, is September 2022. So it runs from the 1st of October, the 1st of the 10th, 21 to 30/9/22. Everybody happy with that? Then they say here, A Limited.
No, Charles, can you please repeat that?
Hi, Sally.
Hi, Charles, how are you?
Fine, and you?
Good, good, good. Could you please repeat what you just said, sir?
Okay. If that's the financial year, all I said was that is the financial year. Okay, the financial year that we are currently dealing with starts on this date and it ends on that date. That's further required. But we want to determine when did this acquisition take place. So in the beginning of as the question started, there right at the top, it says A Limited became a subsidiary of B Limited on the 1st of April 2020 or 22. When is the 1st of April? So it's April, May, June, July, August, September, so halfway through the year. So around about here. On the 1st of the 4th, 22 was the
Charles?
at date.
Hi, Charles.
Yes.
Hey, today you're breaking a lot, eh?
Say again.
You are breaking.
Am I
I'm
breaking?
not sure if it's just me.
Takalani?
Yes, you are breaking. I'm not sure if it's just me who's hearing that.
No, I thought I was alone too. I thought maybe it was my network.
Okay, can everybody hear me now?
From my side, you okay?
Okay, 100%. Just give me a shout out if it happens again. So here we have the financial year and we have the at date of acquisition. Okay, at date of acquisition. Everybody happy? So what we are saying is this part must be consolidated And this part,
Am I still the only one who's getting these cuts? Maybe I might
Takalani,
just restart.
Sean, can you hear me properly?
Yes, I can.
Okay, I will rejoin.
No, just
I will
let me
go out and
finish.
rejoin.
Okay, 100%. Okay, guys, so here's the financial year. Here's the financial year, and we want to consolidate the purple part. That's the part that we must include. Guys, just hold on for me. Apologies for that, guys. Okay, so we have the consolidation, so that this part must be part of the group. This entire section. The blue part, the light blue part, should be eliminated because the group was not yet formed there. Does that make sense? So if we have profit that we've made, so if we go to A Limited, if we look at A Limited, if A Limited has got the same financial year and it made a profit, then this part must go into the consolidation, and this part, oh, sorry, this pen is keep on sliding. This part should be eliminated because the group was not formed. In other words, we cannot take that part of the profit into the group. Does that make sense to everyone? Sally?
Yes, sir. Yes, sir.
Are you happy?
Yes, sir.
Okay. I'm going to leave that there for reference. We'll get back to that now. So, but we must now establish what the profit was that we made. So if we look at the additional information, it says there, the sales of A Limited for the year was earned as follows. During the first 3 months, 40%. For the next 3 months, 15%. For the sales figure. For the rest of the financial year, the remaining 6 months, 40% of the sales figure. So let's put that on the graph. So they say up until here, where it's 3 months, they say 40% of sales. For this part, 15%. And remembering that this is excluded from the group, the rest is 45%. So 45% of the profit must be included in the consolidation. Any questions? Okay. Remember, you guys must ask questions so that I can explain what you're not grasping. This is very important. They say A Limited maintains a gross profit percentage of 40%. All other income and expenditure were received and spent evenly throughout the year. Income tax must be apportioned according to the profit before tax for that period. Okay, so we are happy with what they say there. They say, but apart from what we've explained here, it doesn't matter what part of the year we are at, the gross profit percentage remains at 40%. Did I have that right? 40%. Meaning that if I have sales and I have cost of sales, this answer is 40% of that of sales. That's what the GP means. Sales times 40%. That's all that they are saying there. Okay, let's go back to the question. So we will have to do an allocation of the comprehensive income items. That is the most important part that you have to realize in this question, because we need to get to the profit. So let's quickly go back to the answer. So this line is what's holding us back. We must calculate that. The part that the group was not yet formed. We don't want part of this consolidation. Okay, so let's start. The best way to do this is to have a split. So you will have a section called the allocation. This is all calculations. Hey? Remember, your analysis and anything else that's not part of the required will be calculations. So allocation of comprehensive income items. Okay. We have, let's quickly have a look at what is given. They don't really tell us. They say the debits, they say they are property, plant and equipment. There's inventories, there's cost of sales, so mark that. There's administrative expenses, you should mark that. There's depreciation, there's staff cost, there's interest paid, there's income tax. All that must go to the comprehensive income statement. Let's go to credits. Share capital is a statement of financial position, financial position, financial position. Sales. Highlight sales. Interest received. Highlight. Then we have trade and other payables. We have dividends payable. We have ordinary shares. We have preference shares, bank and accumulated depreciation. Okay, let's quickly go and have a look at how to separate. So first we will have sales and cost of sales. So don't overcomplicate it. Sales and cost of sales. Make a total column. So do a structure, follow a structure, do a total column, and then we will have the first 3 months. Okay. We will have the second 3 months. Second 3 months. And then we'll have the last 6 months. So Let's just put, just for clarity, let's maybe put dates. So what would the first 3 months be? It will be October, November, December. So 1 October to 31 December. October, November, December. The second 3 months will be January to January, February, March. The last 6 months will be April to September. Everybody happy with that? And they said that for the first 3 months, it's 45%, 15%, and the remaining 45%. 40%, I think this one was. 40%. So I'm still at that first note. The sales of A Limited for the first year was earned as follows, okay? So we want the sales, the cost of sales, and if we deduct those two from each other, we get the gross profit. So what is the sales? Let's first do the totals.
376,000. Or is it of the whole amount, total amount?
Yes, so it's 940, yes. So let's put that 940 in first. Total cost of sales?
On the 40%, it's 370,000.
There they go.
It's 564.
564. And the answer there is remember the gross profit is at 40%, and if you calculate that, you do get 376. Remember I said the GP is 40% of sales. As per my calculation here. It's a sales figure. So GP is 40% of sales. And that's how you calculate that. And that will give you the GP. Rand value. Everybody happy? Okay, gross profit. Let's see, after gross profit we have other income. Let's see what other income there was. So we should go to the credits, because income is always shown on the credit side. We have sales, we have interest received, debentures, and we have financial institutions, 6,000. Okay, we have debentures, so interest, debentures, and interest, financial institutions. We say 1,500 and 6,000. Those two amounts. Excuse me. Guys, just a reminder for those of you that didn't do that didn't do it yet, to please post your student number in the chat section. Okay, let's see if there are any other incomes. Bank accumulated depreciation is not income or expenses. Okay, so that is it for other income. Then we have administrative. What do we call the other name?
Distribution and other expenses.
100%, Polisa. Okay, so let's go see. So that would be debits because our expenses are listed on the debit side. We already took cost of sales. Then we have administrative expenses of 48,000. We have depreciation of 20,000. We have staff costs of 100,000. And then we have other financial expenses. And then there are bank and dividends. All the rest will be balance sheet items, assets. So let's the last line. So those three are separate. Then we have finance expenses. We have interest on debentures, and we have interest let's say financial institutions as well, because it's the bank, it's that safe bank. Okay, so interest debentures is the 4,500, and I think that's it. There weren't any overdrafts. I just want to make sure this alignment is correct. Where am I now? So there's the interest on that. Okay, so I think that is, it for that, but let's, because we didn't have the overdraft, I see there's no overdraft, so only the holding company's got the overdraft, so we don't have to concern ourselves with that. So there's nothing yet, so let's leave that blank. Interest on debentures though were 4,500. Okay, then we know we need to deal with the tax. And they said the income tax expense will also be split according to the same method. They say here, A Limited maintained a gross profit percentage of 40%. All other income and expenditure were received and spent evenly throughout the year, so we can split it using those 40, the 15, and the 45. And then they say income tax must be apportioned according to the profit before tax. The profit before tax. So we'll calculate that now, but we know that needs to be apportioned. So let's say after deducting that, we will get the profit before tax, and then we will get the income tax expense. But before we can conclude, just remember this information isn't the only information provided. Okay, we also need to scan through the information on the right just to make sure there aren't anything that any items that will affect those financial statements. So we've already dealt with number 1, so we're happy with that. Number 2 says A Limited applied for A Limited, immediately write subsidiary. A Limited applied for a loan at Safe Bank, and it was granted at an interest rate of 15% per annum. Fair interest rate for a period of 5 years. The interest for the year ended. The interest, guys, please make sure that your mics are muted. The interest for the year ended 30 September 2022 is not recorded yet. We still need to record it. Okay. When did we get this interest rate? When did we obtain this loan? Does the information say anything about it? There's the safe loan.
For a period of 5 years.
Yeah, it's for a period of 5 years. I'm happy. But for how long did we have it in the current year? They say they safe loan, got the loan from 1 January 22.
It's for the period of 9 months because it's from January to September.
100%, 9 months. So if we want to calculate that interest, we need to say it's the 100,000 times 15%, but times 9/12, because we only had that interest for, that loan, we only had the use of that loan for 9 months. So profit before tax should be the sum of all those items. I'll correct that now. Remember that is a negative. Okay, before I can continue, I need to know that everybody is getting those amounts. Is everybody happy with where we got these amounts?
I'm happy, Charles.
Yes, sir.
Thanks, Sally.
So far, so good.
Then I'm very happy as well. Okay, so so now we have to go about apportioning these items. So they said all other income and expenditure were earned evenly throughout the year. So we need to apply the percentages above. Since I'm using Excel, I'm going to work a bit quicker. Please tell me if you guys do not get those amounts. And here we need to use the gross profit. For the first one, it's perfect, but for those two, it's not.
Sorry to disturb you, but I think you did a mistake. On the April to September, they can't have less values because it's 45% compared to the other one. The first two, we got the same amounts, but on 6 months, it's not the same.
Thank you, Nombuso. My formula made a mistake there. I made a mistake with the
Okay.
formula. You guys happy with the first one? Sally, are you happy?
Yes, sir. Yes, sir.
100%. So let's quickly apply. Here, I think we need to wait a bit because remember, we're also dealing with interest. We need to make sure the information is accurate. That we're using the correct timelines. So pause on that one a bit. With the administrative, the distribution expenses, they said we need to assume that it was incurred evenly. So these items we should assume was incurred evenly. Everybody happy with that?
Hi, Charles.
Lisa?
No, Charles. So, sorry, man. So it means that we'll use the very same percentage.
No.
45.
No, not in this case, Lisa, because
Okay.
they say we incurred it evenly. In other words, we need to use the number of months, not the percentage for sales. So if we say something is incurred evenly over the year, we need to use the months. So there we will say it is that expense divided by 12 times 3.
Okay.
That one is also 3 months.
Okay.
And that one is
6
6 months.
Okay, I've got you.
Okay, everybody happy with that?
Okay. Okay, thank you, Charles. I've got you.
100%. The interest that we paid will also be, we need to work on that evenly portion, but for the first 3 months, interest on the financial instrument, that means that loan, we must calculate very carefully because we only obtained that loan on the 1st of January, meaning that the first 3 months won't have a figure. Everybody happy with that? Because we only obtained the safe loan on the 1st of January. So the first 3 months won't have any interest because we didn't have the loan. From there on, it's evenly. Remember, that's already for 9 months. So divided by 9 times 3. That one will be divided by 9 times 6. Everybody happy?
Hi,
Interest on the
sorry, can you explain that again?
remember the loan. The loan we only obtained on the 1st of January. So if I look at the first 3 months, which is October to December, it means we wouldn't have had that loan in this year. We only that quarter. We only obtained the loan from there onwards. We obtained it in January. So we started incurring interest from January. So that amount is only for 11 months, the total. So if we want to apportion it, we must divide that by 9 because it's only 9 months worth of interest, and times it with 3 months because that's in the second 3 months column, and that one we must times with 6 because that's the last 6 months column. Everybody happy? Same with the debentures. Divided by 12 times 3. And times 6. There we received interest from a bank, it's other income, so we will apply the same apportionment. 3 months divided by 12 times 3, divided by 12 times 3, divided by 12 times 6. Let's quickly look at the debentures. Oh, yes,
Sorry,
Paliso.
Charles. For the interest, why are we adding interest in the first 3 months? Because look, the last portion for the financial expenses, we've got nothing because it falls outside the financial period. So why are we having the interest there?
Yeah.
I mean, yes, there.
Because we had that for the whole year. We had interest, the interest investment we had for the full year. The interest, we had the liability only for 9 months.
Okay.
Starting there.
Okay.
Let's do
They're
this.
breaking.
Let's do this. Here's our financial year. October, September. We obtained that loan from that safe loan. We obtained here in January. So from then onwards, we must account for interest.
Yes.
Not here. So October to December, we didn't have that loan. We only got the loan in January. So we must account for interest in the January to March, beginning of April, and that section. So here's the second 3 months, and here's the last 6 months. So if we go back to the calculation, we didn't include it there because that's the cross, and we only included the first 3 months which is the 100,000 times 15% times 3/12. And that equals 3750. The same with the 6. There we had 100,000 times 15% times 6/12. So that will equal 7,500. Everybody happy?
Yes, I understand that portion, Charles. Maybe maybe my question is I'm referring to the wrong example, because look at other income. It's a wrong one. Sorry, I'm
Okay.
mixing the I'm mixing the two, because that is the income. The other one is an expense. I'm sorry.
Yes. No
Okay.
problem. So I'm going to put this in any case here for you guys, because I'll send you this solution.
Okay. All right, sir.
Okay. Then income tax expense. Okay, we'll deal with that now. Let's quickly look at the debentures, interest on the debentures. Let's go to the investment part. Okay, so here they say investment in B Limited at fair value. And then we have 7.5% debentures since the 1st of April 2022. So what does that mean? Any suggestions?
I think, sir, it means that we are going to calculate only the 6 month, the last portion.
100%, because the debentures since 1st April 22. So that means it is that investment of 40,000 at that 7.5% that's in the beginning of the debentures. So times 7.5%, but times 6/12. And who can tell me what that value is? Anyone?
It's 15,000.
Sounds a bit much.
It's 1.5, Charles.
1,500. I would love to have that investment. Okay, let's take that, and I'll put that in the solution as well. So there we had nothing, and there 1,500. Everybody happy? So here they said now, they went further and they said, and you must pay very close attention here, they say income tax must be apportioned according to the profit before tax for that period. Apportioned according to the profit before tax. So that's the total profit before tax. The total tax expense is 59,925. So if I want to apportion it, I would have to say it is that second column, the first 3 months, 108,775, the profit before tax, divided by the total profit before tax of 199,750. Times the tax. And that equals
Sorry to disturb you. Can you show us the calculation? Because I think we are on the wrong page. It's still on the debentures. Thank you.
100%. Thanks for that. So this is the profit before tax. And this is the total. And this is the tax.
Charles,
Yes,
can you hear me?
I can hear you.
Can you please? Oh, sorry. Can you please explain the last portion, please? The last tax portion, starting from the total, the profit before tax, and then, please.
Okay, so you take the profit before tax, which is that profit before tax, and you divide it by the 199,750 and you times it with the tax. So you're going to say it's the 108,000 divided by the total profit before tax times the total tax, and that will be the apportionment.
All right, Charles.
Happy?
Okay. Okay, thanks.
Does it make sense?
Yes, I did not catch the calculation, so I'm happy.
Copy this and put it in the calculation. Okay. And then we get the profit for the year. After we've done all that, take that, divide it by the total times the 59, and the same with that. That divided by the total times the tax. Everybody happy? So to go back to this part, let me go back to the calculation. When we do the at date, we want to eliminate this portion. So currently that is, if I look at the calculation we've done, it means that these two amounts fall outside the consolidation period. These two amounts, sorry, fall outside the consolidation period. That being 76,143 plus, what was that last one? 7718. 7718. That must be eliminated. Everybody happy with that? I'm hearing no questions, so I'm assuming everybody's happy. So the profit that we need to take into account is that month plus, although that quarter plus this quarter. So that's 83,860. So if I add that up, I'll get a total of 613,860. And that, the at date is only 60% of whatever is there.
Charles?
Yes, Sally.
Sorry to disturb. I know you sort of explained, right? But I'm a little bit worried about this profit. Why are we having it here ever since we are analyzing the owner's equity for A Ltd? However, this profit was not part of owner's equity for A Ltd. Why are we having it here?
100%. Let me explain that part again, because I was waiting for someone to ask, because then I would have explained. So I'm glad you asked again. Okay,
Right.
so let me do this. So at date of acquisition, okay, so when we acquire interest, acquisition, we acquire equity. What equity are we acquiring? We are acquiring share capital, and we are acquiring reserves, and one specific one is retained earnings. Now, to explain retained earnings, it means all profits made before the acquisition before the acquisition took place. So if I understand that correctly, it means opening, in this situation, it means the opening retained earnings plus the profit before acquisition. Does that make sense?
Yes, it does. However, with what I had in mind, I'm not sure if I'm still on the right path or I've lost. I'm lost. Thing is, you see, when similar questions like this, it's normally on a revaluation, right? Where we get to have like 3 different revaluations. There's one at acquisition, and then one took place during the current year, and the one we have at final. Yeah, let me just say there's 2 in the current year in a way. So basically, when we're doing analysis of owner's equity for the subsidy, there at the top, we're gonna have one revaluation that is that we are minusing it from the other one that we had at the beginning, and then on since acquisition part, there's also going to be retained those two retained earnings that happened on during the course of the year. So that's where my main concern is why are we adding it there instead of removing it from the retained earnings that is already given?
Because of this.
Okay.
Interest.
Oh, snap.
The subsidiary.
Snap.
Was obtained during the current year. And that is what makes this example unique to the other questions that you've done so far.
Oh, snap. Yeah, load up.
Hey?
No, I get it now.
Charles?
Yes.
So, Charles?
Yes.
Put this one into the solution, please, so that we can take note of this.
Mm-hmm.
You
broke up there. What was that?
I've just asked if you can add the notes, these notes into the solution.
Yes, I'm adding the notes. Okay, everybody happy? So there's the retained earnings opening balance, as I said there. And here's the profit before acquisition. Because we acquired the interest in the shareholder during the current financial year. Everybody happy? Okay, moving on. So now we've established what the shareholding should be, the interest should be, and how we should split the at date of acquisition equity items. The NCI will get 40%. So that's the value of the NCI. And now we have to say, but what was the investment? What did the parent pay for this investment? So now we say, what was the investment in A Limited? Let's go to the question. Here's the investment. In other words, the parent paid 397,756 Rand for that investment. So 397756. In other words, we are recognizing a goodwill because the parent paid more for what the interest is actually worth. So we are recognizing a goodwill. $29,000. Okay. Everybody happy there? Then we go to the current year. In other words, the rest of the current year. What remains of the current year? We say profit. Now we must go and add the rest of the profit. Remember, we've already taken that into account. We must now take that into account. The 6 months. The 6 months that this has been a group. The 6 months since we acquired the interest in the subsidiary. So it is 55,965. Everybody happy? Let's see if there were any other intercompany items that needs to be taken into account in this analysis. So now we need to read the information. Let's just quickly read here. We have 75% debentures. They don't say in who. There's ordinary shares, preference shares, and then they say here. They don't say. Okay, yeah. There's one. We have dividends declared 30 September 22. But that wasn't our dividends. That was dividends that was declared by B Limited, the holding company. So let's maybe go through the information and see if there are any other intercompany transactions that need to be taken into account in the subsidiaries analysis. We already dealt with number 1. We already dealt with safe loan. Let's look at number 3. Checks to pay the outstanding dividends declared on 30 September 21 were sent to the shareholders by both the companies but not recorded in the records yet. And here it becomes interesting. B Limited, we are not concerned with because that's the holding company. A has got no interest in B, but B has got interest in A. So whatever A is paying to its shareholders, B will get some of it because B is the major shareholder. So shares were paid 7,500 and 2,000. So let's go to the information after the answer and we say dividends. There were ordinary dividends and there were preference dividends. Ordinary dividends was minus 7,500 and minus 2,000. This we all take now to the since date of acquisition column. So it's that times 0.6 and that times 0.4. Let's go back to the information and see if there's nothing else. A Limited has decided to declare dividends for the year ended 30 September 2022 and amount for dividends to the ordinary shareholders is decided on 7,500. We took that into account. This transaction was not taken into account by both companies when the trial balances were drafted. So it's now being taken into account. 5, no guarantees was given by the subsidiary.
Sir, sorry to disturb you, Charles.
Yes.
Yes, I always get confused between the dividends that have been declared on the additional information and the dividends payable that are on the credit. I always mix up the two. Like, can you explain why do we only use the one on the additional side and not on the additional information and not the ones on the credits that they say it's dividends payable?
100%, no problem. The word, the key lies in the word payable. That means it's dividends that was declared previously but not yet paid. So we are not concerned with whether it was paid or not, or whether it must still be paid or not. We are concerned with, has it been declared? What amount was declared in that financial year? So that's the key. That's what you must look out for. If they say this is the dividend declared, then you use that amount. The dividends payable means they could have paid dividends in the previous period, or they could have declared dividends in the previous period, but they have not physically paid for them yet. So that's why you have to go to the additional information most of the time, where they will tell you what dividend was declared, and that's the one that goes to the analysis.
Oh, okay, thank you.
100%. Sally, I see your hand is up.
Yes. On while we're still on dividends, there's a question that I came across. I think it was last night. It's talking about dividends right on the additional information, and later on, like when I was done with it, I was checking how far did I go. I noticed that that dividends that was on the information, they didn't put it on our owners analysis of owners equity. So I just want to know which part of dividends goes there and what part of dividends don't go there, like according to the information that we're given. Some I understand it's already counted for in the retained earnings, depending that it was depending on the date of the dividends. When was it declared?
Sally, I will have to have that question that you did, because dividends declared must always be deducted if it's declared by the subsidiary.
Okay.
Then it must be declared. So then it must be declared. So if that question that you didn't do that, you can just send me over WhatsApp. You can send me a picture of that question.
Most definitely. Send it to me.
100%.
All right.
Then point 6, they say ignore any tax implications. Okay, so we've done everything. We've done the ordinary shares, the analysis of the shareholding. So let's quickly give totals, and then we head towards the preference dividend, a preference share analysis. Okay, so there we have that. I'm just widen that to include that. So this is the total value of the NCI that must go to the statement of financial position. NCI to go to statement of financial position. Okay. So let's quickly do the analysis for the preference shares. Let's read the information first. So A Limited has got how many shares? So we have the share value. Share value is 20,000. Share value per share is 50 cents. They say they're 50 cents. So we need to say total preference shares in issue is that divided by the value. And that's just 40,000, not rand value. 40,000 shares. And what is the shares owned by B Limited? Let's go to the investments. A Limited at fair value, 18,000 preference shares. So we hold 18,000. Shareholding percentage equals 18 divided over 40. So 45%. So the parent holds, or let's say B Limited holds 45% and the NCI holds 55. Share capital will equal that value. At date of acquisition, we only had 45% of it. Okay, 9,000 rand, and the rest went to NCI. Then we say investment in A Limited. What did we pay for it? We paid 15,000 for it. We are recognizing goodwill of 6,000 rand. Nothing else happened. Then we have the current year. And then we say profit attributable to the preference shares. That will always be equal to the dividends of the preference share. And we saw earlier the dividend was 2,000. Everybody happy? And that finalizes the analysis. So you guys see, you shouldn't stress about the preference shares. Calculate the value, calculate the per share value, determine what the total shares, how many shares there are. Then you determine what is our shareholding in those shares, and then you get the shareholding percentage. Same as with ordinary shares. The only items that goes to the at date of acquisition will be the share capital of the preference shares, the investment in the preference shares, to determine if there was goodwill or not. And then the profit attributable to the preference shares will always be equal to the dividend declared. Everybody happy? Okay.
Sorry,
Sorry.
Lungile?
Yes, I wanted to know why are we not adding the 6,000 into the first total, or it doesn't matter? The
What?
goodwill.
Yes. Why are we not adding?
Hello.
Lungile, where do you want to add it? Just explain to me again.
Why are we not adding the 6,000 to the total of 20,000?
Because it's not. It's a goodwill that's recognized separately. It's not part of the 20,000. The 20,000 is share capital.
Oh, okay, no problem then.
Are you happy?
Yeah.
Okay, Nombuso.
I'm not happy. I wanted to ask the same question.
Are you happy now?
Because, okay, what's the difference between the equity analysis of the preference shares? Because I think the reason why we're asking this is that on the ordinary shares, we do add the goodwill on the column for the total, but now you're saying on the preference share equity we mustn't add it.
We're not adding it to the total.
But okay, maybe we still have to go through our study material, because all along, I think on most examples that we've done, even on tutorial letter 102, we've been adding it.
Maybe I'm not following what you want to add. If I don't understand what you want to add. I don't see that, sorry.
Okay, when I do my equity analysis, let's
Yeah.
like the one that you have now on the screen, I'll say share capital, retained earning, profit. Then I calculate like you've done,
Yes.
Then I will say then my next column, okay, I will go and check the investment. Then after I've calculated the goodwill, then I'll have a line here that will say goodwill. Then I add the goodwill on the total and add. Then I don't. Then I put the 0 on the NCI because they have nothing to do with the goodwill. Then the next column that I will do, I usually do is the consideration and NCI. Then I add. Yeah, it's usually added, like I usually add it on the total and also add. Am I wrong?
There can never be a total amount for goodwill, because the total didn't earn a goodwill. So you're saying you're doing, because there's another way you can do it. You say you do this.
Yes, we do that. Yes.
It
But
doesn't.
what we've been doing all along is that we're adding it on the total.
That cannot be. If you come across it where it's in a total, you must send me a picture of that, because there's you can't add it like that. It has got nothing to do with the total. It only goes to the act, because it's only the parent's goodwill. But whether you do it like this or the way that I've done it, it doesn't matter. As long as you can indicate there's a line for investment and there's a line for goodwill, it doesn't matter how you did it.
Now, I think if you get time, please go through our study on our study guide and also on tutorial 102, because it's been the guideline that we've been following all along during our studies, and also even on our assignments. If I am correct, we've been doing it like that, and they've marked us correct.
Nomusa, if you find that in your study guide, please just take a picture of it and send it to me so that I can just get clarity. I won't be able to have time to go through the study material. I've got 7 other modules, okay?
Okay, thanks.
So just take a photo and I'll give you a quick answer.
Okay, thank you.
Okay. Okay, so Nombuso will get back to us, and if there's anything that needs to be communicated, I'll communicate it over the group. But this is definitely the right way to do it. Okay, so time is not on our side. So that we've done all the calculations. That's all we've done so far. We haven't started with the statement of financial position or the statements that they actually require. And that's actually what is counting the most marks. Okay. So let's quickly have a look at that. Everybody happy? Okay.
Happy.
So here we are doing the required part. So we are doing B Limited and subsidiaries. Statement of financial position as at 30 September 20.2. This is what is required. What does my statement look like? And that is something that you must already see in your mind immediately. It is a structure that doesn't change. Okay. We'll start with assets. Then we have the non-current assets. Let's quickly go see what other non-current assets there are. So let's go to the debits. There's property, plant, and equipment. There's inventory, trade and other receivables, but there's investments. So investments and property, plant, and equipment will be non-current assets if they are not intercompany. So let's look at the investments. First up is the investment in A Limited and an investment in B Limited. So those are excluded. They are intercompany related, and they shouldn't form part. Everybody happy with that? Okay, but we should include property, plant, and equipment, as well as the goodwill that we have recognized. Let's start with property, plant, and equipment. Property, plant, and equipment. Let's first see what do we have. We have the 773,500. We have those two amounts. Okay. Everybody happy? Is that all that should be taken into account?
And the depreciation?
We say depreciation.
It's Poliswa.
Poliswa? Definitely. You always have to show the property, plant, and equipment at
cost.
Carry amount. And that will be under my credits. So somewhere here we should see there's accumulated depreciation. So that must still be deducted. The 150 plus the 80. Everybody happy? Then we have the goodwill. Goodwill is what we calculated. Sorry for the jumping. Goodwill. Where is my first analysis? It's the 29,000 plus the 6,000. Remember, there were two Goodwills. Equals the 29,000 plus the 6,000. Ordinary and preference shares. Always remember that. That is the current after the non-current. Any questions? Then we have the current assets. I saw inventory there. I saw trade and other receivables. And there was bank. Inventory. 220 plus 160. 220 plus 160. Everybody happy with that? Trade and other receivables. Will be the 311,244 plus the 135,575. Everybody happy? Then we have the cash and cash equivalents. And here you must be a bit careful because remember there was checks that wasn't taken into account yet. Okay, so the cash, here's the bank. There was only the 40,000 minus the 7,500 minus the 2,000. Remember, the only reason why I'm deducting it is because the question says these checks of A Limited was not taken into account. With B Limited, we'll deal with separately because B Limited has got a separate bank account, which we can't add together because B Limited's bank account is a credit. It's an overdraft. And because we can't add it together, it's because of number 5. It says there, no guarantee was given to the subsidiary for the overdraft of the parent's bank account. So if they say no guarantee was given, you cannot offset the bank account. But if the question in the exam says guarantee is given, then you can offset. So just make a note on your guys' side. And then that is our current assets. Guys, I'm going to close off the question here. We will continue. I'm not promising, but if you are part of the WhatsApp group, you will get a notification. But I'm going to try and organize an additional session to complete this question, as well as start with cash flow statements over the weekend. Otherwise, if not, I will see you guys next week again. And we will complete the question. Total assets. See, there's someone's got their hand up. Axe. Axe, you can ask your question.
Sorry, sir. Can you send us the WhatsApp number again, sir?
I will post it in the. I'll post it again now. Just copy it here. And please remember, I always ask it nice, and you guys, or some students don't do it, but please send your name and module code to the WhatsApp number. Okay, guys, if I can ask you a big favor, please complete the session evaluation form. I have another session to run to at past, the FAC2601 session. If you have any questions, we can try and deal with it over the weekend. I will speak to Adele tomorrow and see if we can arrange an additional session over the weekend. However, we are pressed for time. There aren't enough time at the moment. So guys, thank you very much. You have been a very good crowd. Thanks for the participation. Please remember to complete the session evaluation form. It's in the chat section. There's a link. And then I will see you guys hopefully over the weekend. Please keep track of the WhatsApp group number. If you guys scroll up in the chat section, you will see there's a post from Adele Blacker with the final feedback form. Thank you guys. Hope you have a lovely evening, and then we will speak again.
Thank you.
Thanks, Charles. Bye.
Bye-bye, guys.
Thank you. We got the link.
Sally and others that are still on the group, is the group link that you can probably share. I'm actually not part of the group. I request that I get a group link so that I'm able to get all other documents that we shared. Thank you.
Hi. Hello? Okay.
Guys, I was gone, not realizing that I didn't finish. What is this? Completing the form. If anyone has a link, can you please like resend it, please?
It's on the chat box. Just scroll up.
Oh yeah, thanks. I found it.
Hi guys.
Hi, Faithful. Hi, Faithful. Yeah.
I'm just thinking about this thing of a goodwill,
Mhm.
which means if Charles is right, so somewhere somehow the static guide has misled us. Because as Udamboso had said,
Yeah.
that's how I've also been doing it. I've been adding a goodwill